Okay, welcome to the Safe Wheel live stream where I share my real P&L on 3 accounts and teach my proprietary Safe Wheel options trade system for free. And the system is currently up 24% year to date. Now, please type in the chat that you can hear me okay. I'm going to keep moving forward and assume that you can hear me. Also, post any questions you might have. The earlier the better. That way I don't end the broadcast before I get to your question. All right, let's get started. The first thing, you hear me, Will, thank you. First thing, thanks, Walter. Earnings Edge. I did not make a trade in the Earnings Edge. This is the Earnings Edge account here. Started with $5,000, and you can see that I'm up just slightly. What am I up? About 1.8%. Hardly up at all. This account has a lot of volatility in it. My overall record is 24, 9, and 3. So we're getting close to the end of the year. You can see that I'm kind of breaking even so far. I am actually up $1,553, but that's how much my commissions have cost me with this Earnings Edge. But I did change up the system about a month ago, approximately. And since I changed up the system, I made my second tweak. I created a new exit. My record is 3 wins and 1 loss, and I'm up about $1,450 since then, up about 40% since I made that last tweak around just over a month ago. Let's just call it October. So doing quite well with this newer system that I put in place. It's a 50-50 shot. Should win about half the time, lose about half the time. But when I lose, I'll lose around $200, and when I win around $500. And those are the numbers based on the back tests. And so far, my record is 3 wins and 1 loss. So we're keeping to that 50-50, actually doing a little bit better. So if you want to sign up for the Earnings Edge, there's a link in the description. All right. And also I have my Premier Level 5. That's this account here. And you can see I started with $30,000. Now I have about $31,500 approximately. My record here is 10 wins, 2 losses, and 3 ties, and I have 3 open trades. And this is the account that if you have $30,000 that I recommend because it has a low volatility with higher returns. So this is where you want your good amount of money. If you have a good amount, this is where I would put my good amount of money, my $30,000 or more. Obviously I have over a lot more than that, and I have that in a different system, the Synthetic Dragon, but this is kind of that medium system that I use. What's really good about it is it's truly diversified, because the only way to be truly diversified is to be protected against a crash, because when the crash occurs, every single asset needs liquidity and they all go down together, but except for volatility. So if you're long volatility, you're protected in a crash. So you have a good hedge. So you want to be long volatility and make money at the same time. So you want to be hedged and make money at the same time. That's what the Premier Level 5 does. And you want to have low drawdown. So the highest drawdown so far has been around 4%. And I started trading this in April 8th. So I'm up about 5.5% right now, but my lowest drawdown has been 4%. Now the S&P, since that time, has been down 22%, and it's currently down 11%. So we're vastly outperforming. Okay, so let's get into the Safe Wheel. What's going on with the Safe Wheel? That's probably why most of you are here. I'm trading Uber. I like Uber. And I currently have no positions on except for my hedge, my put hedge. Got 3 of those. And last week I sold a put. I also bought a call, a cheap call. But I still have my put on. All right, so the question is now, do I want to keep this? Or do I want to start over? And so the answer to that is this put hedge within 70% of the price? So currently we're trading at 28.50. So 28.5 times, let's just go with 80% of that is 22.80. So I'm close to 80%. If I was even within 70%, this put hedge would be good. Now, the next thing I look at is how many days does this have left? Because when I start getting under 100 days, this thing starts depreciating too fast and I need to replace it. So next week, I'm going to replace this thing no matter what, based on this criteria here. But right now, it's good. It's in, the strike is good. The amount of days left is good. So I'm going to keep this. Now, technically, I could trade out of everything and pick a new stock and start over. But I like Uber, so I'm going to continue with Uber. So what do you do with the wheel strategy? Well, first, we're hedged. This is a safe wheel. You're hedged. And a regular wheel, we would sell a put. So let's do that. I'm going to go into the nearest expiration cycle, the one that expires on Friday. I'm going to sell a put. I want to get more than 28 cents. So I can get, right here, I can go down to the 27.50 and get, this is good enough right here because it's 28 and 30. So I could sell this for a little more, but what am I going to do here? I have my option here of going to the 28 or the 27.50. I could go either way. I think I'll go to the 27.50. It's right on. I'm going to get my 28 cents or so. Okay. So I'm going to sell one of those. The sizing is important with this system. So the fact that I'm between $5,000 and $10,000, I'm going to trade one of these, and I'm going to trade 3 put hedges. If I had $10,000 to $15,000, I would sell 2 of these, and I would do 6 put hedges. So for every $5,000 increment, you could increase the size, or I would increase my size, I should say. So let's see if I can get 30 cents. Let's sell a put. 27.50. Okay, so I got 30 cents for it, got a little more than maybe I thought I would. Now, the next thing to do is to protect that put hedge. So if the stock goes up very quickly, I want to make sure that that put hedge doesn't depreciate so fast that I lose a lot of money. So I want to cover myself. So I'm going to buy something around $5 or $6 I'll pay. And that would be, looks like the 31. So I'm going to buy that, buy just one of those. Try to get it for $5. I don't know if I'll get it, probably not. I'll pay $6. I will not pay $7. Okay, so now I have my position on for next week. What did I collect here? About 25 bucks. So, probably gonna make about 25 bucks next week, depending on how things go. If the Uber shoots down significantly, I've got, I'm covered. If it goes up significantly, I'm covered. And if it stays around where it is now, which is pretty normal, I'll make a little bit on the depreciation. Okay, so that's it for the safe way. I'm not going to do anything for the week. The only thing I'm going to do is I'm going to come in on Friday when the market's getting ready to close and make sure that Uber is not over, what did I do, 31? This call, I want to make sure that Uber is not over 31 at the end of the week. I don't want this to expire in the money. I'd rather just sell it. I don't want to own shares going into the weekend. So if say it's $32, I'll sell this for $1 rather than holding getting assigned the shares. So that's the only thing I need to worry about. So technically, honestly, I don't look at this system until Monday morning, about 15 to 20, 30 minutes before I come in and do this live stream. I'll come in and take a look at it, see what I need to do. And then I'll look at it Friday for 2 seconds, see if it's over 31. So this takes, I don't know, how long does it take me to do this? 15 minutes a week. those are the kind of systems I like, you know, that don't take very long and that are simple. I think it's simple. Okay, let me make sure. Oh, one thing I'd like to say also, if you have not, if you don't want to watch all the live streams and see every scenario that I've gone through, and in fact, there's other scenarios that I haven't even gone through before, and I put together a flow chart so you could see every possible scenario that could occur. And I have that for a link in the description. I also have the 6 filters that I use to buy the correct stock that fits this system to make sure your sizing is correct. It's more about sizing, and that's the reason why you pick one of the correct stocks. This is kind of on my list. These are my lists of potential stocks that I might use for this system. But that's available. I have it for you can get both of those for under $100. Only $89. If you want to just get the whole system, you want to kind of skip the line, and rather than watching the live streams and learning how to do this, you will still need to watch some of the live streams, a couple of them, just to get a feel for how I do it, even if you have the course. But there is a link in the description for that. Also, be sure to hit the like and subscribe button to help out the channel. If you feel like I'm helping people, I feel like this helps people learn how to trade options and doing it the proper way. So hit the like button. That'll help move this, it'll help the video get out into the algorithm and get to more people. And also hit the notification bell if you're not getting the notifications for the live stream, so you're not available or you don't see the live stream. Hit the notification bell. That way you'll know when the live stream's coming up and you'll be able to get access to it. If you don't hit the notification bell, I don't even know if you will get access to the live stream until it's already been recorded. You won't be able to get to it live without that notification bell, as far as I know. Okay, so let's get into any questions we might have. Rye says, hello, good morning. Good morning, Rye. Okay, let's see here. How do you see if it's profitable? How do you see if you're profitable in your selected stock? Well, I'll go to the account statement, profit and losses here, and then you can see Uber. I'm up $165 year to date. You can see APA down 256, and Macy's, the big dog here, $1,700. And FCX, I made some money with that, and then BAC basically broke even. So I hit the account statement and go to the profit and losses. That's how I see this. Now, this is in order to decide whether to switch stocks when the cycle is over in the safe whale. Sometimes it is. Sometimes I go to the factor of have I made money? Then I will get out. But it's more the cycle itself. So this is a new cycle right here. When I put on this put and call. So did that cycle, make money? I'll look at that, but not really in detail. I mean, I kind of have a feel for it, that I'm doing okay. Typically, if the stock goes up, I might lose because this hedge is too far away, and so I've got to move it up or get out of the position, and it's possible to take a loss. Now, typically what will happen is this is cycle number 1. I might still get assigned and own the shares, and I might be selling calls against this, and I'd still be in that one cycle, and I might start a second cycle because there's room for one more cycle. So I would sell another put, and it is possible to be assigned again and own 200 shares. And if I cannot sell any premium, let's say I own 200 shares, I've done 2 cycles, I'm kind of a little bit stuck in the position. That's what happens with a wheel, by the way. The traditional wheel is the stock will go down, you'll be stuck, you can't sell any premium, because if you do, you get called away at too low of a price. If I get into that situation where I can't sell premium, my put hedge will kick in and help, and I'll close out the position. And if at that time I'm at a loss, I will take a loss and just get out and start over again. So that is one time where you just take a loss. And that's when you're in, you've been assigned twice and you can't sell any premium. You just get out, and hopefully your hedge will cover you at that point. Sebastian, when you own a stock and sell calls, why wouldn't you sell a lower strike put at the same time just to cover the cost of the hedge? So I would do that if I can't sell a call. Let's say I have the cycle number one where I get assigned, and let's say I got assigned last week on Uber because I sold the 28.50 put, and the Uber was trading at $27. So I own 100 shares. I would want to sell at least the 28.50 call, because if I get called away, I don't want to lose money. But let's say the 28.50 call doesn't have enough premium. Well, that means I've that particular first cycle is like it's kind of like a down soldier. It's like one of my soldiers and he's down. So at that point, when I have a down soldier, I'm going to go ahead and add a new soldier into the mix, and I'm going to sell a put. But I wouldn't do it unless I get in that situation where I can't sell any premium. And I hope that answered your question. Just to call it, because, why wouldn't I sell a lower strike put at the same time? Because I don't want to have, I won't do it right away. I want this one cycle to play out, and I hope that I don't get stuck. And the only time I put on that second cycle is if I get stuck. Because if I get stuck, that means I'm closer to my put hedge, and that means my hedge is helping me even more, and therefore I can sell a put at that point. Because that put that I sell will be closer to the hedge. That hedge will work harder for me. Okay, and Paul, still have Macy's. Revisit Macy's. Yeah, 23.68. The way I look at it is, one of the criteria that I use, let's look at this, is the volatility. You see how I'm in the 50s, even in the 60s here? So if I look at Macy's, I'm in the 60s and 50s. So Macy's has a little more juice, right? Just a little bit more. But the fact that it has that amount of juice, I feel like that is kind of a good determining factor to stay with Uber. I like the amount of juice. Obviously, Macy's has the same amount. So I feel like I'm going to get the same kind of results between Macy's and Uber because of this amount of volatility, the amount of juice. So Uber is closer to 30. So I like a little better than Macy's for that reason. Sebastian, I mean, if you sell the call of your cycle number one and use the remaining buying power of cycle two to cover the cost of the cheap call hedge. Yes, so I can sell that call or sell that put right away when I'm in the middle of cycle number one, but I'd prefer to have cycle number one be dead, and then therefore the stock is lower, and therefore when I put my second layer on, I'm closer to the hedge, and therefore if I end up with 200 shares, I want to be right at that hedge or very close to it, because that put hedge there's times where it might not cover 200 shares. So you want to be as close to it as possible by the time you get to 200 shares. So I hope that makes sense. So I'm not worried about the cheap call. It's $5. So if there's any other questions, I'll give just a few seconds here to give anyone any opportunity if you want to ask. Thank you. Okay, good. I'm glad that I was able to answer that. You're welcome. All right. Well, I'm getting ready to end the broadcast. One thing I always like to say, if the P&L is not real. Oh, wait. One more here. By not selling a put during the first cycle, you get a lot more profit on the downside if the stock drops. Yes, I would like the stock to move as low as possible before I put on that that second tier or that second cycle. Okay. So one thing I always like to say, guys, if the P&L is not real, which it is here, you can see it right there. If the P&L is not real, what else are they trying to conceal? We'll see you guys next week.